There we go. Hey, good morning, Julie, Roger, Goodson, Emma, JW, Alan, Tammy. Welcome. Glad to have everybody here. Hey, this is Rick, if nobody knows, or maybe you're watching this on YouTube. And today's date is Tuesday, July 23rd, 2024. Hey, I want to remind everybody that tonight, Doug from Right Way Options will be presenting for the public e-learning, and Doug at Right Way Options also has an open house Wednesday, tomorrow, and Thursday. So if you're not doing anything, whether you're listening here in the room or you're listening on YouTube, check out the open house links, and hope you go take a visit. Okay. Alrighty, let's get started here. So let's look at some pot today. Some cannabis, I guess, a couple of them. Medical, yeah, we're going to call it medical, because we're also going to look at PFE. So we'll just keep it all medical today. Here's JM. JM is setting up. Let's get my little disorganized. All right, we're getting there. So now, if we take this low right here and just drop it across, run it across to this low over here, what we've got here is an inverted head and shoulders. That's one of my favorite reversal patterns off the bottom. It really is. It's a very nice bottoming pattern. And we've broken out, no, let's get rid of that. We've broken out, make this red, right through here. So here's our basically a low to a high. We pull back to a higher low and a higher high. This is a J-hook continuation pattern right there. One of my favorite trading patterns, because just what it's called, a continuation pattern. So what you have is a trend. Whoops, wrong one. What you have is a trend, and then you have a rest, and then it continues. So why not? Why not like that, right? So the next thing I want to do is come up here and put these lines up here. And these are not Fibonacci lines, although I am using a Fibonacci tool, the Fibonacci retracement tool. These are quadrant lines that I use, and this represents these three. This wider line is what the effect I'm trying to get. Represents the 50% area. So from up here, what is this? Around 550. I guess the date might be more important. Say May 16th, May 17th here. All the way down to where it appears that we've bottomed out. We rally up and pull back. This line is the 25% retracement. We've cleared that. In fact, we've rallied over that, pulled back, found support there, and we're headed to the 50% retracement. Okay, so once we clear that 50% retracement, that opens the door for these other targets. That opens the door big time. So that's something that I'm going to be looking at. Now, there's nothing wrong with playing with it right in here. If it gives an opportunity to buy, I'll certainly consider that. One thing I want to reach out and share. The next ones we look at, I think we're coming up on earnings, so please remember to make that decision whether you want to trade through earnings or not. Some people do not mind. Some people would rather cut their big toe off than trade through earnings. So you be sure you watch that, okay? But MJ might be a way to handle that, because that's a nice little ETF there. All right, let's take a look at the next one, and that's going to be CGC. CGC here. Same principle, same everything. I won't try not to stay quite as long on this one. You can see that low to a high to a higher low. That's a J-hook continuation pattern. So this is the trend we're looking at. Very short term for sure. But I want that to continue, and I want to be part of that. I would love to be part of that. Wouldn't you? Wouldn't you love to be part of that? And here's the 50% retracement if we take it from whatever date that is. Again, May 16th up there to the low. So there's the 50% retracement, 25%, 100% retracement. So great little chart here. This has earnings in August. This one's not so bad at all. So we might want to watch that. The next one is Tilray. Tilray. There we go. So Tilray has earnings coming up the end of this month. Looks like about 6 days maybe on the 29th. So keep that in mind there. Here's our pullback. You can see we go from a low, high, higher low. There's our continuation, or really maybe we shouldn't say that. It's just the bottoming, low, high, higher, low. Then boom, there's some continuation to the upside, or trend to the upside. And it pulls back, and we're looking for that next continuation. And right through here, the middle line there, will be the 50% retracement from this high to this low. This is extremely tradable. I've traded this many times, this type of, from here to here. Let it consolidate, because typically what will happen is price will get a little sloppy. It'll start to consolidate through here. Once it breaks out, assuming it breaks out, what it does is it makes these targets very nice. Good money can be made there. And basically it's price reaching up, back up to this high here. Remember not to be afraid to take some profits along the way, okay? Did I cover all those? I did. All right, let's take a look at PFE. We'll keep it medical here. Whoops, not that, this over here. So here's PFE, and this has also created a inverted head and shoulders here, shoulder, head, shoulder, a nice double bottom, and it just took right off. Boom. And here it pulls back. And notice now we started our line here. So this would be the trade, or this would be the playground that you might trade in. I'm not saying it can't go higher. It can go higher, but for those putting a plan together, and you want to try to stick with your plan, well, let's stay in the same state. Let's play in the same playground. Let's don't cross the street and get into another playground. Let's just leave this as our playground. So just using this space right in here, let's start drilling down to what we might look for. So here we come up, rally up, we pull back, and notice that we rallied right to that 25% retracement level, right? We pulled back, we came up and tested it. Now we broke out, but what are we doing here? We're fussing around right at that area, up and test, right? The next area that I'm going to look for is to jump up to that 50% retracement area. Now, I'm trying to, there we go. In a perfect world, you buy it, and then the next day, 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 and next day. You close it out, you make a ton of money, you're the smartest cat in the world. Okay, wake up, you're having a dream, because that's not what's going to happen. Not in a million years. I'll eat my hat if that's what happens right there. But what is very possible to happen is this right here. And I'm not saying today is up, but it's very possible you have 1-2 days up, and then, you have a couple of rest days. And then maybe you have 1, 2, maybe 3 days up, and then a couple of rest days. This is more like it, assuming it remains in that bullish trend. Okay, so we don't want it to break trend. We don't want the market to fall apart. Let's put the market over here, and let's do this. Okay, and the market here, let me turn this on so we can see what it is right there, right here. The market has not, market meaning the SPY here, has not gone bullish yet. Now, I think the market overall is bullish. I think we go up. It just might not be today, might not be tomorrow. We may sit here and just drag around and just wear everybody down. before it moves up. And it just might, market SPY just might move down, retest these lows, and even give a hint it goes lower before it goes higher. But overall, I do think we end up going higher. But if you look at the market right now, pre-market here, not exactly setting the world on fire. So we need to wait for this to roll up. Well, we just want that on our side, okay? So I'm watching PFE for a combination of PFE, the buyers to step in over here, or just a place to, an entry that would make me comfortable. The market to roll up, and now we can look at this and trade it up toward that 50% level. And this, from this line to this line, that's almost a 14% trade. That's not too shabby at all. That's good money right there. And then we still have room to move up. All right, let's move this down. Now let's take a look. Was that it? Oh, I have NEM. Oh, yeah. I wrote NEM down here, and that one is setting up pretty nice. Let's get rid of this right here. Now this one here, we're going to put something different on there, the projection lines, but it's still quadrant lines is what it is. So we're going to take this area right through here. We're going to go up to that high. We're going to pull this in here to grab that low. And right here, boom, we want that 50% mark, and then we have some possible targets along the way. We'll talk more about these if I see them moving on the scanner this morning or anytime during today, okay? All right, we better look at the SPY here. Now, like I said, the SPY hasn't really taken off yet this morning. Overall, I think we're bullish. Overall, I think the SPY ends up, back, and going up again, all right? Right through here, we don't know the timing, and no one knows the timing. That's why we're watching the candlesticks, watching it for the timing to say, okay, here we go, or let's just wait, something like that, okay? So what I need to see in a perfect world, what I'm going to like is this right here. I'm going to come over here and do it, okay, because it's not happening over here. I want price above the T-line and the T-line above the trend indicator. And notice it's not like that. Price is actually below the T-line. Now the T-line is above the trend indicator, so that's a plus. We're right at the edge of make or break right now. Now if you're a bull, what you want is you want to make it. You want price to jump up there, and then you want life to go on. If you're a bear, you want a great big fail right here. And if it does fail right here, then what you've got is a bearish H pattern setting up. So two important levels on the SPY chart would be this candle right here. If we roll over and we get through that candle, the 50 period moving average is likely to be a target. The next level to the upside that I think is important is simply to break out of these two big candles right there. We need to break out of those. If we do something like this, where today maybe we close like that, all right, that's a plus. That's good enough for me. But to keep this going, we seriously need to break out of that 258.85 area. We need to get through that right in there, that area, okay? So real quick, let's take a look at the Qs. I don't think they're faring quite as well, but they're doing a good job, trying to hold this bottom here. You can see that the Qs came right down to the 50% level, and now they're trying to work themselves up. And it may take some work. It may chop around and just chug till we get through up there. Yet you have earnings on NEM. So please, everybody watch earnings. Make that decision whether you want to be in earnings or you do not want to be in earnings. It's a very easy decision to make. You either do or you don't. What else is there? Let's take a look at the diamonds. There we go. So the diamonds right here, taking that breakout up, it came right back down to the 50% area. If it holds, I think that's positive, very, very positive. What we need to see is a breakout. And right now, we need to be over 405.90 to get the bulls going. IWM has been a favorite of everybody because of the big volatility this thing has had the last couple weeks. You know, big up and then big pullback. So you get a lot of traders in here. So now if you remember back here, I was saying I think IWM is still very, very bullish. I even got hate mail over that one. I really did. I got hate mail over that one. And, well, here we are. We're up. We're doing a great job. Looks pretty bullish to me. I'm going to move this to a 2-day chart, 3-day chart, 4-day, 5-day. Just look at that. 5-day, I think, tells a good story. Let me get rid of all that. There we go. See how we broke out here? That's a very important level around that 210.90. Keep that in mind, okay? And, you know, I would not, we better put a line right in there too. So if we were to pull back, I'm still going to be bullish IWM. This is just the level I needed to stay above. That's right through there. Right now, it's putting in a J-hook continuation pattern. What it's continuing from is this right here. That move. And now it's trying to put the continuation in. So what we're going to need is a little bit of follow through. Now, if you've been trading for any length of time at all, like 24 hours, you know that stocks aren't that clean, okay? You know that stocks just do not go up, go down, and go up. They just don't do that. You know, they chop around, they make you beg for it. You know, they go up, they tease you, and then they burn you, and then they tease you, and then they move up. Does that remind you of anything? We'll leave that for later in the room this morning. All right, folks, what time is it? Oh, I've been at this long enough. 17 minutes on the video. I'm sorry so long. Thank you, everybody. Thank you very, very much for being here. We'll see you all in the room in about a half an hour when the market opens up, okay? Thanks a lot. See you shortly.